Give us some sense, marry up the news of the week with what happened in the markets. If anything, I think what we heard out of both the monetary and the fiscal side is we're going to keep the accelerator going in this economy, and yet the markets, by and large, sold off.
You're absolutely right, David. What happened is that you had the really negative news of COVID that President-elect Biden has been talking about over the last many months really hit people finally. People are seeing that the vaccine rollouts are much slower, and the impact of the vaccine will take a little longer, if not much longer, to really get the economy back to working properly. On the other side, we had the huge impact of the Biden announcement last night on the 1.9 trillion. And I think by and large, if we go through to next week and beyond that, I think this, what I call a social infrastructure program, is going to be very, very positive for the markets, because you do need to have the poorest of the population and the lowest income populations in the US be taken care of sooner than later in order for the economy to prosper. You need to make sure women can go back to work. And you can see, as part of the Biden plan, you have childcare, for example. You have maybe some elements of wage increase. You have some elements of making sure the vaccines get distributed properly. And more importantly, you have a very strong group of economists, I think, that will be taken over, with people like Janet Yellen, with people like Jeff Zients, who will be the czar for COVID, at least now, and also Gary Gensler and others. So I think what we will see is the economy getting, stronger as we go through to the rest of the year. Expectations are closer to 3.5% growth in the US. And that will be a very different market probably as we get into some of the trades that we're starting to see.
Well, you mentioned the right word, trades. You're not a trader, you're an investor. You take a longer term view. And I wonder, for an investor, getting past the phenomenon of just, I must say, throwing money at the economy, justifiably so, on the monetary and the fiscal side, at some point this has to start coming off. Are investors prepared for that eventuality?
You're so right, David. I think, as you just said earlier, the Federal Reserve, Jay Powell, said that he will continue with the programs that he's had. We know that there will be more programs beyond the program that President Biden announced last night. There will be probably 1 or 2 or 3 more trillion when we come to infrastructure. And also the private sector really starting to come back to work with the vaccines. So you're starting to hopefully see by the second quarter or third quarter of the economy, natural forces getting markets to go up. And at that point, the Fed might be able to start taking its foot off the pedal, and the impact of some of the social part of the infrastructure that we talked about earlier might not be so necessary. The investors are looking long term. They're starting to maybe worry about inflation. I think that is still a little bit ahead of us, but there's no question that there are certain sectors, such as semiconductors, such as food, such as areas where we're seeing shortages or problems with distribution because of COVID, getting impacted price-wise already.
Just briefly, China is doing apparently a pretty good job. Their growth is really picking up. They actually didn't have that much stimulus, at least that we're aware of. Does that suggest that places like Asia might be a place for longer-term investors to be thinking about more seriously?
So, David, at the end of last year, we started seeing a major flow into North Asia, China, and the rest of sort of neighboring countries. And that flow continued the last couple of weeks. I think the interesting thing will be that obviously will continue. China has about a 7% growth rate expectation for this year, and the rest of Asia has something like a 5% rate. So what you'll see is definitely domestic-oriented growth in these regions. At the same time as what we will happen, we'll see is, with the Biden plan, if we're successful, some of those flows will come back into the US as well. So you're going to have sort of a bifurcation. In the meantime, emerging markets very broadly will probably see some flows too, because you have very low prices. You will have slowly the vaccines come in. And also there's so much liquidity sitting there looking for a little bit more risky assets.
So just to wrap this up briefly, but what about some of those emerging markets? Are they getting left behind, including in the vaccines?
You're so right again. You're seeing that sort of an uneven growth in emerging markets, all the way from more fragile states, low-income countries who have very difficult access as we speak to the vaccines. As you can see, COVAX and Gavi are working very hard in getting vaccines for the lower income countries. At the same time, as you have these Northern Asian countries really taking off in a very different way. So that is definitely the case. But again, I think you will see some flows coming back into the US from North Asia.